Let's talk about Fed Day. We'll review some key earnings, and we'll just remind you that January is almost over. Folks, it is hard for me to believe. It feels like 2025 just started yesterday, but we are 1/12 of the way done with 2025. Just curious how you're doing on your goals. Are you moving in the right direction? It's just so interesting to see how fast everything moves. So let me get into Fed Day. I've got a lot of different notes. I've read plenty of different articles, so it might be a little. I'll just have to review them as I highlight them. So as expected, no rate cut. This is something we've been calling for a long time. Again, I am in the camp that we will get 0 or 1 for the year. So not a surprise that we did not get one yesterday. I've quoted Jerome Powell a couple of times here. We'll get into those, and I'll remind you it's equally important next week. Next week, the Fed will be out of their quiet period, and we're going to start to see Fed presidents show their colors. If you remember, I think it was Christopher Waller. We talked about him. I want to say it was last week, might have been the week before. He was basically saying a March rate cut is coming. Right, Christopher Waller was saying things like we might have 3 or 4 rate cuts. And then obviously on the other side of the table, you've got Fed presidents talking about the possibility of 0 and 1. I think that is going to become more striking and more interesting next week when they start to talk. So what did Jerome Powell say? Again, that was all the energy in front of the microphone. The decision, non-event. The statement, non-event. It was when he was up. So here we go. Inflation remains somewhat elevated. Unemployment has stabilized at a low level. That's what's happened, right? Unemployment rates has fallen to 4.1. Inflation by the numbers has ticked up. Certainly CPI has a trend in the upward direction. Certainly seems to be an accurate statement to me. He did indicate that he's had 0 contact with Trump since the inauguration. This is important because obviously Trump was, I think, speaking at the World Economic Forum and talked about rates need to go down immediately, things of that nature. And Powell basically said, hey, haven't spoken to him, so no comment. Which I thought was the right thing. Now for the March rate cut, this was something I was looking for. I think I said yesterday morning, will there be any talk of a setup for a March rate cut? And here we go. We don't need to be in a hurry to adjust our policy. Sounds like March rate cut, not really on the table. Obviously, lots of data between here and March, but that was interesting. Other things I noted that Powell said, again, central bank in no hurry to adjust its policy. Again, they're going to be here a while, I think. The stance on the economy remains strong. Okay. We seem set up for further progress on inflation, but being set up and having it is another thing. What is he talking about there? Well, he's really talking about what Dan Bird and I have been sharing with you for a couple of months now. There's this thing called the base effect. And the base effect for the next I think it's the next 3 months. Yeah, it's the next 3 months. Ooh, fighting off a sneeze. The next 3 months actually are in the favor of the Fed and in the favor of inflation. If we could get something breaking in shelter over the next 2 or 3 months, because again, shelter is being calculated at 4.6%, where it is certainly much closer to 1%. We could see some significant moves in the right direction for inflation. Also, oil. Oil is down, I think, $5 or so in the last month. So again, what Powell said is, hey, we're set up for some good news, but I'm going to wait to get it, right? We are not going to move quickly. We are going to wait for the data to come. So I think that is wise advice. Powell did say if there is a spike in layoffs, that unemployment will go up quickly given the low hiring rate. So really what Powell is warning us there is, hey, this move in unemployment might be violent, right? There used to be a saying that unemployment takes the elevator up and the stairs down. Again, Powell is letting us know that that is still possible. And then the last thing I noted that Jerome Powell talked about was long rates moved up for reasons unrelated to our policy, aka term premium story. So what is he telling us there? He's basically saying, guys, look, we lowered rates 100 basis points and the long end went up 100 basis points. Don't look at us. We have done our job. Look at Congress, look at the national debt, look at inflation expectations, look somewhere else, which frankly, I've been telling you or advising you the last week or so, this is not a Powell problem. This is a market problem. And this is a market saying, hey, we don't think we could bend the curve on national debt. We don't think we could bend the curve on paying more and more interest on our debt. And the government, Congress, y'all need to stop spending money like drunken sailors. We have, if we could just bend the curve. Wow, that sounds like COVID. Everybody remember that from COVID? Bend the curve. Crazy. Anyways, I digress. But if we could bend the curve of our national debt ever so slightly and just show some real momentum, that would be enough to remove term premium from the market. It would also lower inflation expectations. So again, Powell had lots of other stuff to say. I'm going to be paying attention to the other 18 Fed presidents that will get microphones next week. We will talk more about that on Sunday once I get the calendar of events. Other economic news that came out today, we did get Q4 GDP. First cut of Q4 GDP came in at 2.3%. 2.3%, which again, it's okay, not great. Q4 was estimated to be 2.5, so we grew less than expected. Q3, if you don't remember, was 3.1%, so certainly a downshift. Consumer spending rose 4.2%, so we are still using our credit cards a lot. Government spending rose 3.2%. So again, government and consumers are still spend. We did get our weekly unemployment rate. Again, we were getting a little bit concerned about this. We had 2 or 3 weeks of it going kind of up into that direction. Well, we had a big move down, which is good news. Weekly unemployment came in at 207K. That's down 16,000 for the week. The forecast was 228. So the forecast was for the trend to continue still going up. And it thankfully did not. Continuing claims, again, something we've talked about probably being more important to watch because I fear duration expanding, much like home sales, right? Days on market. The unemployment rate, weekly claims, kind of secondary concern for me. I'm watching continuing claims, and again, good news there as well. Last week, we had 1.89 million. It was estimated to rise to 1.9 million, slight rise. We actually came in at 1.85. So a pretty nice move down. Again, it was only week on week, so a move down of that kind of numbers is not bad for a week. Let's get into some earnings. We had some big tech earnings after hours yesterday. Tesla missed on top line, missed on bottom line. Auto revenue down 8% year on year. There is talk of a cheaper car coming. There's always talk of a cheaper car coming. Meta beat top line, beat bottom line. Although Reality Labs lost $5 billion. $5 billion in the quarter. Crazy. They are still committed to spending 60 to 65 billion on capital. It'll be interesting if they say that in 90 days, right? It'll be interesting if they curb any capital spending in 90 days. They probably haven't had enough time to really think about how to spend those dollars, given the deep seek thing. You got to imagine that maybe there's a better engineering way than just brute horsepower, but we shall see. Microsoft did beat top line, beat bottom line, but had slower cloud growth than expected. And then IBM came in with a beat top line and bottom line. Those were the tech earnings yesterday. We did get some others. Las Vegas Sands Casino. Again, I'm watching casinos, seeing what's going on with discretionary spending. They matched revenue but missed on earnings. UPS, ouch. UPS missed on revenue, beat on earnings, but Amazon Amazon's going to cut 50% of the volume with UPS. That's not going to feel good. Caterpillar missed on revenue, beat on earnings. Again, we're starting to see that a lot. Miss on revenue, beat on earnings. ServiceNow beat top line, beat bottom line, but gave weak guidance. And then MasterCard, again, we're really racking up credit cards, beat top line and bottom line. We did get some update from Redfin. Redfin says that the typical U.S. house or U.S. home is taking 2 months to sell. It is the slowest pace in the last 5 years. Folks, we told you this was coming. Days on market's rising. This is how we get a buyer's market. This is good news, good news, good news for us. Right disrespectful offers, follow up, know your numbers, 30-year fixed rate debt, all of the things that we talk about on the channel. We did have our school accountability group yesterday. We had a new member join. Unfortunately, this new member lost their home in the Altadena fire. They have joined the group to talk about that experience, insurance, rebuilding, all of that. Our hearts go out to her for losing her home. Thankfully, everybody is okay, but still very tragic. Also, talked about negotiating a 50-40-10. Again, 50% first, 40% seller second, 10% down with a local credit union. Again, we get that particular program from Velocity Mortgage and Stephen Dow, but it's great to see the initiative of you taking it to you small commercial banks or small credit unions. I think that is great. Looks like we're going to turn off Vegas ticket sales tomorrow. This is your last day to get Vegas tickets. We do have 30 left. So it looks like we won't sell out, but that's okay. We're going to turn off ticket sales tomorrow. There is 1 VIP ticket and 29 general admission. If you are coming, you've got less than a day to get those tickets. Just so you know, we will keep virtual sales open. We'll keep virtual sales open. Let's congratulate 2 people for joining school yesterday, Caroline and Justin. Caroline and Justin, thank you very much. And we got a golden ticket. Ivan, congratulations for getting your deal. Your golden ticket will go out in the mail today. Let's close out by talking about Double Line Capital CEO Jeffrey Gunlock. Jeffrey Gunlock is out saying, you know what? I expect his base case is only 1 rate cut in 2025. 2 at most, but his base case is 1 rate cut in 2025. To which I say, Jeffrey, welcome to the club. Jeffrey also sees long end, think 10-year note, going higher over the short term, thinking the next 3 to 6 months. So Jeffrey thinks that the long end is not done going up, which is going to be interesting. Lastly, Trump is out talking about beating inflation. And basically, his plan to beat inflation is something we should hope he does and hope it works. More energy production. Remember, folks, a week or 2 weeks ago, I told you that oil is the key to this. Oil is the domino. If we get oil down to $60, we really could be doing something. Also, slashing regulation, rebalancing trade, and then reigniting the American manufacturing. Again, all things that I think we would all like to see, all things that would be great long term. So it will be interesting to watch that transpire. Folks, I hope you have an amazing day. Do me a favor. If you're going to come to Vegas, you got 1 day. Get your tickets. Go to Eventbrite. It's right there on Eventbrite. Look up one rental at a time. Also, you can get the virtual ticket there if you want. There's 2 different choices. And I just want you to smile. And I guess lastly, I don't know if you've heard, but there was a terrible tragedy over in Washington, D.C., where a helicopter and a small commercial jet crashed, and appears that no one survived. And that is a horrible reminder that life is precious. It could be over in an instant. And it's just another reminder that, some of the stuff that bugs us or sets us off is just it's just unimportant nonsense. 70 some people lost their life in a blink. No fault of their own, just not good. Not good. Hug your loved ones. Make some memories. Tell someone you love them. Smile. Just another reminder. Later.